Hey guys, so in today's video, I'm going to be teaching you a super simple ICT Forex trading strategy that made me $1,800 just this morning. Now, not only did it make me some money, but it also made all of the members inside of the VIP group money because I sent this trade as a limit. I'm going to be giving you a full breakdown of exactly how I analyzed this trade to make that $1,800, and I'm going to be giving you a full checklist so you can frame up these trades yourself. Now, if you do enjoy this video, then don't forget to leave a like, comment, and subscribe. But let's jump straight into this analysis. So first, we need to understand the theory behind the trading strategy. So we need a checklist that we can follow to make sure that each trade we enter is an A+ setup, and we're following all the rules to make sure they're all the same. So what we're going to be doing is identifying the liquidity which is built up between the times of midnight and 7 a.m. UK time. So let's take an example that we've drawn on the chart. So let's say this is midnight and this is 7 a.m. UK time. So what we're going to be doing is identifying the high and the low that was created between that time zone. So then we can tick that off. Next, we're going to wait for a sweep of liquidity on either side of this zone. So we're either going to wait for a sweep of the lows or we're going to wait for a sweep of the highs. So we're not going to do anything until we get that sweep of liquidity. Once we've got that sweep of liquidity, we're then going to identify our structural points to make sure we understand when price gives us a market structure shift. Once we get that market structure shift, we're then going to be identifying the fair value gap which caused that market structure shift, and that is where we're going to be taking our entry. And once we've taken our entry, our stops go above the most local high, and we target the opposing liquidity, which would end up being the lows in this scenario. So then we wait to get tapped in, and then price simply drops from there. So that is the theory behind this entire trading strategy. That is the checklist that we're going to be following. So let's go and break down exactly what happened this morning. First, we need to identify the liquidity that was built between the times of midnight and 7 a.m. UK time. So if I place a vertical line on the chart at exactly midnight and then at 7 a.m., we can see that this is the window that we are looking inside to identify the high and the low. So as we can see right here, we've got the low of that entire range, and right here at the top, we've got the high of this entire range. So now we've identified our liquidity points, and these are the areas we're waiting for price to sweep. So we're not going to do anything until we either see a sweep of that high, or if price trickles all the way to the low and takes out the lows. So we're going to sit on our hands and wait and see what price does. So as we can see, price then moves around inside of this zone, and then we finally get a sweep of the high right there. So now that we've got the sweep of the high, we're then going to wait for a market structure shift to indicate to us that price now wants to go lower. At the same time, if we look to the left of the chart, what can we also notice? Well, right here we can see that this is yesterday's daily high. This means that again, there is a lot of liquidity that is sat right above this high because there's a lot of orders that are sat, potentially stop losses, buy orders, sell stops. There's a whole bunch of orders that is set right above this previous daily high, and that is a very key target that price would like to go and take out before continuing to drop further. So what this means is that if we go ahead and take out the Asia high, which we've now just done, and we go ahead and take out yesterday's daily high, it gives us more confluence that price is now going to go and drop to the downside. If we take a look at structure, we can see that right here, we've got a higher low, higher high, higher low, and a higher high. So at the moment, price is building a series of higher highs and higher lows, indicating that it is still relatively bullish. Now again, price sets in a higher low and then a brand new higher high. So again, we don't do anything and we're simply sitting on our hands waiting for price to give us a market structure shift. Now again, as you can see, price comes down to the previous higher low, but it doesn't break below it. Again, indicating to us that price is looking to go higher up. So if I continue to play price on, we can see that price then comes, takes out yesterday's daily high. This right here is our higher low. So in order for price to go lower, in order for us to get a market structure shift, price needs to break below this low. So as we can see, price then does chop around for a while, but then we finally get this market structure shift. Now we've closed below the previous higher low. This means structure has gone from being bullish, putting in a series of higher highs, higher lows, higher highs, to now breaking below the previous higher low and giving us a brand new lower low. So once we get that lower low, it signifies that the markets have shifted from bullish to bearish, and what we can expect is a lower high and then a continuation lower. So once we've understood about market structure and we understand that the market structure shift has now happened, our next step on the checklist is to take our entry at the fair value gap which caused the market structure shift. So now this is where I get a lot of questions where people say, but CEO, there's a fair value gap all the way at the top. Why did you pick this one right here? And the reason for that is because I always like to take the fair value gap that caused the market structure shift. Now, when this happened, there was a lot of inefficiency that entered into the market because the only thing we were offered during this movement to the downside is sells. We were never offered any buying positions, which left the market in an inefficient state, and it gave us the market structure shift, meaning that there was a lot of volume which came into the market to drive price in the lower direction. So because of that, the fair value gap that caused the market structure shift is always more prominent to me because I know price is more likely to come back up and rebalance this as opposed to the extreme, because the extreme didn't cause the market structure shift. So now we take our entry at the open of the fair value gap. You can always put your stop loss right here. However, my methodology says, why be stingy and limit yourself with the stop loss when you can cover your entire position to make sure you are completely safe? Yes, granted, you're giving away your risk to reward and you're not going to get those flashy risk to rewards that you see these influencers post, but you're going to be safe. You're not going to get stopped out if price does decide to come up to this extreme fair value gap. You're still going to be in the trade and you're going to be safe. So for me, I put my stop loss just above that high right there. And now our last step inside of our checklist is to target the opposing liquidity. And as we can see right here at the very bottom of the Asia session range, we've got our opposing liquidity. So this means because we've taken out the high, we're going to target the low. Now in the flipped direction, if we were to sweep the lows, we would simply target the highs. So that is how the strategy works, and that is the checklist. So now let's go over everything that we've done inside of this checklist to see how we framed up this trade. Well, number one, we've identified the zones between midnight and 7 a.m. UK time, and we've got this nice high and low right here. We then waited for a sweep of liquidity where price swept the high right here. Not only that, but to add more confluence in today's trade, we also swept yesterday's daily high as well. After that, we then moved on to the next step, which was to wait for a market structure shift. And again, we were creating a series of higher highs and higher lows. We then flipped, got that market structure shift, and put in this lower low right here. Once we've done all of that, we identified the fair value gap, which gave us that market structure shift, and we're utilizing this as our entry. We then put our stops just above the most local high, and then we target the opposing liquidity, which in this case would be the Asia lows. So now all of the hard work is done. We've identified the trade. And again, this is where I sent the trade into the VIP group. As you can see, it was a screenshot of the trade in question just before it happened and all of the numbers that I needed for the stop loss and the take profit. Once all of the hard work is done, we now simply sit back and wait for price to either give her a stop loss or a take profit. As we can see, price comes up, gives us a super clean entry, and then it starts to come back to the chart. Now, as you can see, like I said, price can always go ahead and target the extreme. Now in this case, if you were stingy with your stop loss and you put it just above this high, you would have been stopped out. You would have potentially got a re-entry on this one. Yes, your risk to reward would have been better, but you would have already taken a stop loss. Now for me, I wanted to be safe, so I covered the entire high right here. And then from there, price decides to continuously just drop straight to the downside and give us this massive push straight to the Asia lows. Now, once we've taken out that liquidity, see how precise price is. It takes out the Asia lows, it takes out all of that liquidity, and then look, completely reverses. This is why your exit is just as important as your entry, because if you don't know when to get out of the market, then you're potentially going to be staying in for price to come back and take you out at break even, or worse, if you haven't gone break even, take you out at a stop loss. But this is why you need to make sure you understand what market is telling you and where it is looking to go and all of the pools of liquidity that price can potentially target. But that was today's trade. We took out the nice Asia lows, had a reversal, but we were already out. We made $1,800 on this 1 to 1.6 risk to reward trade. And not only did I take it, but everyone inside the VIP group did as well. Now in today, we are actually in another EU buy limit as well, following the exact same methodology. If I move myself out of the way, we can see that we've got this exact same fractal nature playing out. A sweep of the Asia lows right here. Price then comes, taps into this higher time frame area of interest. We get this market structure shift and price is currently running away. We can see that again, price is moving very nicely in our intended direction. So this is the current state of the trade that we're in at the moment, and we are very close to a take profit. This was a nice 124.35 risk to reward trade, which we're currently in. So that was the 2 trades for today, following the exact same methodology. So if you guys aren't part of the VIP group and you want access to these trades, then click that link down in the description, become part of the community. But aside from that, I hope you guys enjoyed this video and got some great knowledge into exactly how I take these setups and how I frame up these trades. If you did, don't forget to leave a like, comment and subscribe. But on that note, I'll catch you guys in the next video.